Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the market reaction to President Biden's State of the Union address, the earnings beat from Salesforce, and the rules surrounding a custodial UTMA account. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Last night, President Biden delivered his first State of the Union address. What is the market reaction this morning?
Oh, good morning, everyone, and thank you, Allison, for that intro. The overall, the speech last night I thought was safe, if you will. I don't know, and that's not necessarily it was bad. It's just saying there was not much new or really anything particularly bold in the State of the Union speech that would drive an agenda different than the one that's already really in progress. So obviously we talked about the atrocities in the Ukraine going on from Russia and how we're handling that. Talked about some veteran stuff, did a little bit of talk on Build Back Better, but overall kind of very safe touching of the high points of the issues. His agenda is administration is working, their basic agenda, if you will. So I thought overall is very safe this morning. This is the slide I meant to have up here. So the futures are in the green. I don't really think that is directly related to the speech, but overall, I think honestly, the speech last night, as far as a stock market reaction, was really not a factor.
Switching to earnings, CRM software maker Salesforce released earnings this morning. Is Salesforce a buy, sell, or hold?
Well, Salesforce has long been one of my favorite companies out there. Visionary CEO and Mark Benioff. He's been very vocal, not only about leading his firm, but also making the world a better place. So he supports several agendas outside of just making CRM the best customer resource management software out there. I will say that they've always been high end. I'm a small business owner, obviously, and I have several clients. So I have a client resource management program. I just can't afford the CRM program that he has for financial advisors. So they charge a premium and they get it, right? Because they're that good. So when I talk about horse and jockey relationship, I think another thing, this is another situation like Apple, where you have a brilliant horse in the fact that you have a high margin, high-end software company with a fantastic product, and then you also have a visionary CEO. When you look at the stock journey, though, it's been a little bit of a ride, right? It went up, here's near peaking out in November above $300 a share, basically down by a third, dropped below 200 lately. And then, it's bounced recently and it's got a nice uptick this morning after beating earnings, beating revenue, and then their guidance, guiding higher, if you will. So kind of the trifecta, if you will, for an earnings release. So overall, when you look at the stock, even the 5-year is kind of a journey, right? It's below where it was in the 2020. So is it a good entry point here? There's still a lot of risk, right? And you get that with firms, tech firms, right? 139 PE. So out of one side of my mouth, I talked about Tesla's PE being crazy yesterday, and it's hard to get into that. I would say that overall with CRM, it's going to have to be a hold, just because if you have it, that's fantastic. You probably have a great entry point, but I wouldn't necessarily buy in here unless you just have to have it in your portfolio.
Last, we've had a lot of questions lately on custodial accounts. Can you review the rules?
Sure. So custodial accounts are basically, there used to be two types, a UTMA, the Uniform Transfer to Minors Act, and then the UGMA. Well, the UGMA is being phased out. So you don't really, unless you have one, there's no real questions with it, because if you start one now, you're looking at a UTMA. Well, the rules are, this is, how do you get money into the hands of minors? You could either gift it to them up to $16,000 a year per person for 2022. So if you think a traditional two-person parent relationship, each parent can give in $16,000, so $32,000 a year into the account, and you're the trustee on the account. It's not a joint trustee, it's a singular trustee, which is found that out recently. So there's no way to do it jointly. So one person is basically responsible as the custodian on this account. As far as taxation, don't forget that if it's just a regular account, a regular UTMA, then you're going to have tax consequences of it, of the money you make in there. Again, if you make the money, it's no big deal. It's when you sell, realize the capital gains. So just manage, know that that's coming. You get up to $2,200 of gains a year for free, if you will, i.e. you'd pay zero taxes on that. And then above that, the earnings are taxed at the adult's marginal tax rate. So if you're a high earner, high enough to be able to, pass on 16 or 32K to your kids every year to each child, you might be in a high tax bracket to where if you make too much in these accounts, then you would be facing other tax consequences. So really, when you think of an investment philosophy, you really want to be in a buy and hold relationship. Go for the best of breed, of course, investment you can find, but generally you're not looking to buy and sell through this account. This is more put in shares of Disney or Apple or Salesforce.com that we just talked about, and then hold that over time, and then let the account, what happens to that account? Well, as you approach the age of termination, it's a weird term. It sounds like death, but it's not. It terminates the trust, if you will. So the age of termination varies by state. Here in Texas, it's 21. In California, it's 18. So what really happens is when the account approaches that age for the minor, they send a letter out to the custodian saying, hey, we need to hear from the minor and you, and together you will transition into an individual account for the old minor, now new adult, if you will, the beneficiary, if you will. So, which can lead to interesting consequences, right? Say you want to keep this a secret. I've heard a lot of clients are like, well, I don't really want them to know how much money they're going to get when they turn either 18 or 21. And I hear you. But the issue with that is if they don't know about the account, say you're a single parent, so there's not a spouse involved. You're trying to do the right thing, and a month prior to their 21st birthday, you have the car accident scenario where you pass away. That child's not going to know to claim that account. And it's not necessarily, they'd have to open the mail and try to decipher that, or maybe they're not even living with you anymore. So there can be some problems with that. So make sure that somebody knows that this account exists so you can negotiate it. If not, it basically goes into a frozen account that continues to grow with whatever you have in it. But certainly until the minor comes forth, or the beneficiary, if you will, comes forth to claim that account, there's nothing you can do. A couple of interesting scenarios we came up with recently, or discovered recently, is if you are 18, once you turn 18 and then you subsequently open a brokerage account, then it is now in your name. You can open an individual. You do not need a custodial account once you're 18. If you open it the day prior to your 18th birthday, you do need a custodian. Okay. And if you open it prior to your 18th birthday and you subsequently, the custodian and the minor change their mind and say, hey, we want to transition this, you cannot. It is stuck if a UTMA is opened, it is stuck to the age of termination under that UTMA hat. So a little bit weird there, but those are kind of trust rules that are coming in and affecting things. Also, I mentioned a taxable account. You can do custodial IRAs. If you have a child out there that has earned income, whether W-2, 1099 is obviously crystal clear. If it's cash or whatever, that's between you and the IRS to prove. I recommend against it, since it's too hard to prove the income if you would ever have to. But you certainly can open a custodial IRA, a custodial Roth IRA, custodial SEP IRA if your kids have their own business, that sort of thing. So there's a lot of options out there with custodial accounts. I would either take the time to do your own research or talk to me or somebody in the industry before you open one, so due to all of the rules involved. But in some, custodial accounts are a great way to get money into the younger folks' hands. And again, it's time in the market that's more important than timing the market. So getting them started early can set them up for success in life.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.